Hey guys, how are you?
Hey, um, we were just waiting for everybody to join. Yeah, we were on mute, so we'll get started. Today's call, we'll take your guys' questions. Today, we're going to focus on mainly some of the indicators that we like to use to chart on a day in and day out basis, and we're going to go over on TradingView as well as Coinigy. I think Snay will start on TradingView. He prefers TradingView. I prefer Coinigy. They're very similar, but there are some little differences.
Yeah.
TradingView is free for the most part. Coinigy is free for the first 30 days, and then you have to buy it or just create a new email. We've bought both though. There's actually a paid version for TradingView as well. I think there are only so many indicators I think you can use on TradingView before you have to purchase it. That's one of the reasons we bought it. We also have, I think, the ability to share it, but you definitely don't need to. I think there's a fair amount of indicators on TradingView without having shared it. But Snay, do you want to start back at the beginning of TradingView and show someone or show people how you got to where you just got?
All right. So
Just go to tradingview.com.
all right, let's just go to tradingview.com. So one of the cool things about TradingView is that if I have an idea, I could share my chart. Like Sam was saying, one of the cons about TradingView was that it doesn't have all the exchanges. So I kind
Does
of
Coinigy have more or no?
Coinigy essentially has almost. I think it has absolutely all of them.
They don't have Binance, at least as the last time I checked. You might want to check real fast. Check if it has Binance. If they do, it's extremely new.
No, no, they've had it for such a long time.
Really?
Yeah.
What exchange were they missing?
No, I always thought they had.
I swear they're
Binance.
missing Binance. Anyway, you can go back to TradingView.
Yeah, I wonder if they have gas up on here. Um, huh? I don't think they do. Okay. Anyways, yeah. So here's TradingView.
Go back to the beginning of TradingView. Show people how you
Alright.
got to that part.
Yeah. So here's TradingView. It's not only used for cryptos like
Maybe the
TradingView,
traditional side,
Coinigy
exchanges.
is. You know, so
You can view stocks and
right, and futures and forex and commodities. You could do basically anything with this. Um, so you just over to currencies, or sorry, you go to cryptocurrencies, and you can go to overview.
go to
And if you go to
markets first.
overview, I mean, yeah, it's pretty prevalent. So if you go to overview, you could kind of see what the total market cap is and of the exchanges that they have it on. So not too bad, not too bad. So we go back to ideas, and then you could really see like some of the top people or some of like the. It's not really the top. I wouldn't say they're the most accurate, but they are the most upvoted or most popular
community.
ones, right? So
It's
they
a
do
social media platform,
right.
essentially, when
So
you
if
get to ideas.
they post continuously, you have, they kind of get a small little fan base here. I wouldn't judge what they're saying as accurate because they're not right
Take
most
it
of
with
the
a
time.
grain of salt.
Right, they're just not right most of the time. These are ideas again, guys. Like no one here, including us, we're not touting, financial advice. Right, we're not saying this is, what's gold is what glitters is all gold. We're not saying all that. We're just, make sure you guys, even us, take everything with a grain of salt. Do your own research. This is one of the best ways that you could really tell. You could go back into some of those popular people. A lot of these guys run trading
Show
signals
people
as
how
well.
that works. You can actually go back
All
in
right,
time
yeah,
and look at someone's chart.
right. So like they,
Then you
anytime
can
someone
play it.
posts, you could just kind of look at what's going on.
Are they dated right there on the outside? Or you have
They
to go
are
inside?
no, they're
Yeah,
right there.
dated.
See.
So
So like for this guy, this is what he predicted on the 29th, which is fairly relevant, but that's not even a signal. He just says it's going up. It's
So show them.
it kind of shows his resistance
play.
levels.
Show them how play works.
What?
Show them how the play button works.
Where?
Right there on the far right. So you can.
This
is
right.
the chart as of the 29th. And what you can do is you can hit that play button there and see how the chart actually played out and see if it lived up to the expectations. So
Right.
you can see that it did live up to that person's expectations, the buy
Right.
opportunity.
But then we could continue to look at this, and that was just unnecessary here. It didn't even hit the resistance level once. It just kind of took off. And just not much information could be given there. But I guess for the most part, he did predict it right. It was going to go up, but I guess the entry point is a little bit more critical than it should have been. So, all right. So let's just go here.
Hold on, X out of that. Show them how you got to that place.
All right.
Just exit out of that tab. Just close it down.
Okay. So we'll go back to markets, I guess. And we'll just type in BTC and the pairing. So you want to use USD, right? Most of you guys, if you're in Europe, you use euro, and if you weren't, you would be using any other currency that you're involved in. So you go to the Bitcoin dollar pairing, and then you go to interactive chart. And it's weird. It kind of defaults you to Bitstamp, but you could obviously change it. And we'll change it to Coinbase here.
You want to show everyone that the exchanges there are listed. So when you type in BTC/USD, if you want to do that again, it shows you all the exchanges.
Right.
And you can choose which one to pick from. You want to pull that back up so you can show people?
This
Type in BTC/USD.
Right.
So
and
when you
like
type this in, you see the list of exchanges here.
And feel free to pause, if I'm going a little too fast, or make sure you guys ask questions on your right. Which is this. I do this almost every day, like dozens of times a day. So if I skip through something, make sure you guys stop me, or shoot me messages on the Moon Lounge on Snay Says. And make sure you guys are talking in the live chat. So, but definitely, yeah.
So you can choose which exchange again you want to choose from that list. On the right, it lists what exchange that you're dealing with, and when you're charting, you probably want to use if your Bitcoin is on a certain exchange. It's probably most recommended. If you're looking to trade on that exchange. Refer to that exchange. If you're not necessarily in a cryptocurrency yet, you might just want to look at an exchange that has a lot of volume, which means, for example, you don't want to look at a small exchange such as Ether Delta on here if you're looking to buy into a cryptocurrency that you don't have, because it may not be truly reflective of the actual going price or going rate. So you want to use one of the exchanges with more liquidity, something like Bittrex, Poloniex, GDAX, Coinbase, something along those lines. There are definitely a lot with volume, and you can see the volume numbers if you use CoinMarketCap.
Right.
But you might want to delete all of your indicators, Snay, so we can show someone how to, set up each individual indicators. I think that is extremely confusing right now for someone.
All right, let's just start fresh. So, we'll have a new chart, and we'll name it unnamed. Okay. So this is the chart that I've had for a while for my Bitcoin chart, and we'll just take you how to do it from the ground up. So here is the chart, pretty much. Here are the volume indicators. Just kind of shows you what volume. What the volume is on the bottom. This
so
comes
it starts
preloaded
out with a volume indicator right there at the top,
and then you see it shows you the buy signals, or buy volume. So that means how much the volume. If it's lower, if these are smaller candles, it kind of shows you not much volume is traded that day, but this shows you how much more buy volume was sold than sell volume. Like this day was, the demand was high, so there's a large green candle. And this day is a large red candle. Sorry, on this candle. So that's 4 hours. So let's take you from the beginning as well. So here's your interval chart. So we mostly go through is daily.
Well, first,
And then
so
anything below daily, weekly,
the
we don't really
intervals,
apply, right?
you can change to whatever you want them to be. You can
Right.
change them from 1 minute to 3 minutes to 5 minutes and so forth. And what they are is, right now we are on 4 hours. So each candle on this chart represents a 4-hour window. So if you were to change that, Snay, to 1 minute, each candle on this chart now becomes 1 minute, and what you see is a lot more. It's really zoomed in, basically. So it's really confusing if you bring it into 1 minute. I think I don't really know anyone that uses a 1 minute interval. But if you're a short term day trader, you definitely want to come in closer to, say, the 1 hour, the 15 minute, the 5 minute. The minute, I think, is a little aggressive. But I definitely spend a lot of time on the daily, the 12 hour, the 6 hour. But you can change that time interval to whatever you want.
Right.
And then that volume indicator at the top left where it says Vol 20, there are a couple of options in there that you can explain. So you can actually hide that indicator for one. Go back to the hide indicator. So any indicator that you pull up on the chart will come up there in the top left. One thing you can do is you can actually hide it with this eyeball. You can just toggle it on and off. So if you have a lot of indicators on your chart, you can literally just hide them on an individual basis. You can also exit out of them if you hover over that X, you can literally close the entire indicator down if you want to get rid of it.
Right, you could delete the indicator, rather.
Yeah.
Right, not close in. Yeah, you could delete the indicator if you hit that X right here. I'm hovering over it right now. It says delete. But yeah, that's
You can
about
also go into the settings of the indicator and change a lot of things. So if you go into the settings of that volume indicator,
yeah.
So
but that's a little confusing right now. But if you really wanted to, I wouldn't suggest changing it. But if you really wanted to, you could change. This is MA, which is moving average length, which is this orange line based on the bottom, the moving average of the volume for every 15-minute interval. So that's 15-minute moving average. So that's 20. So what's 15 times 20? That's a 300-minute moving average length. So it kind of takes the average of the 300 minutes before it. So yeah, that's what moving average really is. But yeah, so let's just go back from the top. So I usually try to keep it between a day and 15 minutes. But I barely go into 15 minutes. Most of the time I'll really stop at 30 or 45. I just I think that just 30 minutes is a little too. 15 minutes is a little too. A little too squeezed in, right? Yeah. So, like these swings here aren't really swings. They are swings. Don't get me wrong, but I just think you could get a lot more data if you just used a 1 hour here. Yep. So, all right. So let's go back from the top. Bar style, you get to choose your bars. Candles, bars, just stick with the candles. Don't touch anything. I wouldn't touch anything. This kind of
just show them real fast what you could change between. Obviously, most people probably want to see candles, but you can change it to a bar graph.
A bar graph, which is kind of ugly. You don't really get to see your tails or your outliers, rather.
I'm sure there's different use cases for some of these.
Line. So a lot of people like the line.
Sometimes the line is nice. You can just see the price of the market
Right.
all graphed together.
But the candle will give you the most information by
candles
far.
will give you a lot of information. In fact,
Right.
do you want to zoom in and explain to someone what a candle actually is?
So a candle. Let's just go
what
over
a wick is and what the top of the candle and bottom of the candle represent.
So let's just go through an example here. Okay. So let me hide this volume indicator. So this is a large red candle, unfortunately, for Bitcoin. We saw a price drop. So this is the start of the hour, or this is the hour that since we are on the 1 hour interval, this is the hour that is being is digest the hours that is being digested essentially by the chart via the candle. So this is 1300 hours. So that's 1 o'clock PST essentially. Uh, so you see this is a red candle, so that means it opened here. So the start of the hour, it actually opened at 75.49 and it closed. So at 2 p.m. PST, it closed at $7,383. So that's open and that's closed. So that's the open of the hour and that's the close of the hour.
And on a green candle, it would
And the green candle would be the opposite, right? So since there's upwards price movement, it'd be open on the bottom and it close on the top. That means, for example, the 2 hours before that, at 11 a.m. Today, PST, it opened here and then it closed here. Now, what the tails are, it shows you kind of where the highs and the lows were for that hour. So it could have went up and then it might have went all the way down and then kind of corrected here. So I mean,
So
highs
on
and
that
lows
wick-
are highs and the wicks. They're still supposed to be.
So on that red candle there, that wick shows you that it had went inside of that hour as high as 75.65 and as low as 73.57. Though it closed and opened at these two intervals there, and all the candles are connected essentially because if you start back here, you open, you close, and then you have to go right over and you're connected. You open, and then you go up, you close. You go over, you open,
Right.
you close.
You'll always open at the
close.
previous intervals close.
Yes.
So right.
So they're all connected as
Right.
such.
So that's pretty much it. We'll go more into depth how to read these candlesticks and what these candlesticks mean. But if you want to get started here on TradingView, we'll just insert indicator.
So you right-click the screen and click
Insert
indicator to bring up a list of a bunch of indicators, and we'll start going over the ones that we most commonly use. There's lists of how many do you think are in there? Is there over 100 or no?
Yeah, there's thousands.
Do people have self-made ones
So
on there as well?
that's exactly what I was going to go through. So built-ins is what's usually generally used, but public library is something that are massively popular. So we'll just see here.
So built-ins are ones that are commonly used, and that TradingView has listed in for you. In the public library is indicators that were created by the public that are basically upvoted. You can see the number of likes there on the far right. So obviously something with more likes is typically is more used by the community.
So
and you can experiment
for example,
with them, but we'll go over the most common ones that we use.
For example, this is your MACD4, and this is primarily used for Elliott wave analysis, MACD4C. So it's a little bit more aggressive than your original MACDs, and it kind of shows you the end and beginning of waves, which looks like on the 1 hour interval that we're coming to the close of our first wave here of our bull run, which is kind of impressive. But I also added candles, which is the, part of the public library. So someone built this. So it just kind of shows you what actually, and you probably just want to use the day for this. This shows you what kind of price action we really saw. Like we saw bullish engulfing here, which is very bullish movement. That means it engulfed the previous days open and close, which it essentially did for this day, which was the 31st. And you see bullish engulfing is very high, very good price action. And you can say the same thing for bearish engulfing. Like for example this one, and you saw that this candle kind of engulfed the other one based on its open and close. And one of the most other important things are, haramis don't mean much. Haramis just mean, it was a red day or a green day. Dojis are.
It means it was a red day or a green day.
Right. Essentially, it was just like it wasn't one way or another. It wasn't just a.
It was a very neutral day.
Right. Right. You wouldn't consider it bull or bearish move.
It was very undecided market that day.
Yeah, exactly. It was lazily or a red day. Harami literally meaning lazily. So dojis give you uncertainty. It really means uncertainty. This might as well be a hammer. Because there's basically almost zero tail, but even if there's a little tail, it wouldn't be considered a hammer. But this is probably an inverse hammer. But we'll call it a doji because that's what the program is saying for now. So the dojis show like critical market uncertainty. So it means it's either going to break up or break down. That's usually the trend that it follows. Obviously, it doesn't happen all the time, but if you think about what a doji means you have an entire day of trading, and there's barely any price action between open and close. So it really means that it's very dojis are by far the most neutral candlestick pattern, but you'll see that it generally means that price action, greater price action is to come. Like these dojis here, we had that huge China FUD, and then we had a big green day right after. We had record-breaking day for volume.
My contact just fell out.
So you have two dojis right back to back, and then we saw another massive green candle. And if you would have bought at those dojis, you would have been sitting pretty nice. But there's some dojis that if you bought at, like example, this doji, on the 9th of September, or sorry, the 7th of September, you would have been down very far. So it's pretty ridiculous there. So we'll just hide the candles for now, and we'll delete the MACD4 for now. No. We're gonna go over the regular MACD first. Before. I just wanted to show something on the public library. Where it was at. So we're going to insert built-in. So insert indicator, and then you go to built-in, and we'll go to MACD. So here is the MACD for BTC, and we are on the daily. This kind of shows you the this is a moving average cross, essentially a convergence divergence, right? So this is a 12-day
convergence divergence,
right? So you'll see that it's a 12-day because we're on the daily interval, and a 26, period. So it's 12-day. Because we're on the daily interval.
With 12 periods, which are right now daily, but that 12 could represent anything if you switch it to hourly.
Right, so it's 12 candles, right, and then 26 candles. So I guess I should say that these any sort of moving average, it's done based on the candle length, the interval length, and based on your interval, your MACD will change. Based on interval, your MACD will change. So you want to keep an eye out for that. So here's the MACD cross, and the MACD cross on the bottom portion generally means that it's hit its low, and it'll generally go up. As long as that blue line is traveling up. So let's draw you guys something right now. So actually let's scroll over. And I will draw you guys something.
And you want to explain how? So there's indicators on the left as well that you can use. For example, you can use a paintbrush to draw dots and arrows. Right now, he's just using the freeform paintbrush, basically.
Wow, I actually drew that wrong. Whoops. Okay, so uh, yikes. All right, and then we'll draw this, and then 1 second. Let me just double click that, and we will make that green. Okay, so here, this is a positive slope, this green line, and the red line is a negative slope. So if you see this positive slope, that means that's positive momentum, or not momentum, but positive movement still going on. And as soon as you see this, or let's move this, let's bring up the paintbrush again. If you see that, or one of these, or one of these, it means this is the bottom and this is the top. So so what the heck? Okay. So let's go back here, and we'll go historically through an example for you. For example, here on the 15th of August, we could see that we hit two pretty nice, bull movement peaks here, and then the drop off of the China Flood. So here we'll see right here, this little top right here on the blue line, it really shows you exactly where the top is before it started going down a little bit. And then as soon as it went back down, it crossed with a red, indicating that there was downward movement, and then it crossed back again, indicating that this is the top again. So we hit another top. So you could clearly see that when it's when the blue line shifts from a positive slope to a negative slope, so it kind of gives you this top. In the bottom, it'll give you, for example, right here, the blue line, where the blue line really, or example right here, where the blue line really dipped down below, and reversed movement here. So that's the one way you could check for your MACD, and the cross just means confirmation whether it's going up or down. Cross is critical, but the more critical piece is the blue line, changing slope, and so that's what I'm really trying to get across here is this is the blue line changing slope, and Sam's gonna go over core energy after I go over TradingView, but I don't know if you want to chime in, Sam, but it's essentially the same on almost any platform you use, even if you use the exchange's built-in chart indicators. MACD is an MACD.
Yeah, so the MACD is the same whether you look at it on any exchange or not. They're just different. Platforms to use Coinigy is just different look and feel. They all share pretty much all the same indicators. They might have different public ones. They might have different public indicators that are created by the public. Those might be specific to whichever platform you use.
So the blue line is the 12 candle. Yeah. So the blue line is the 12 candle.
And the red is the 26.
Yeah. Or the orange is the 26.
And you can also look at it. There's a histogram there. So a histogram, it's just displayed, is basically just those two graphs correlated into what is a histogram.
Right. So, and this is something you can mess around with, but I wouldn't suggest it. But
you get into the settings of the MACD.
Right. So, and one of the things that does really help me is, making sure that you're able to see it. So you go into style and you can change the color, the histogram, whatever color, whatever
line thickness there.
Right.
That
so for example, that's the histogram, and if I want to make that blue line nice and thick, you could see it's moving in thickness. So yeah. And the second indicator that we'll go over is RSI.
So you would just, on this example, right-click the screen, go to Insert Indicator. You can go to built-ins because RSI is a very commonly used one. And then you can even search for RSI if you want using that search bar there, or you can search for it manually like he did. Well, RSI is a very commonly used, very easy to use indicator as well,
Right.
and it'll pull it up right there below it. And
So this
if you
is
want
a
to create more room,
right.
just close down the old MACD indicator, or hide it at least for the time being.
Hiding doesn't do
while you
anything.
key in any extra room. I guess
So you could I could shrink it right now. See, like, and we'll just shrink it.
Shrink so you can leave it there
Right,
for
because
later.
because you could double click and I
If
could
you
expand it. Right.
double click any one of the indicators, it'll just bring it up full screen,
Right.
and then you can double click to go back to the rest of the screen with the rest of your indicators.
Right. So, and for example, this is an eyesore. Even if you guys are watching on screen, purple on black just doesn't go well. So we'll just change this to, for example, a nice yellow. And we'll even make the price a little thicker, and we'll change. These are the bands that show you very low and very high. So we're going to even make it a little bit more stringent here. So we're going to go 80, and we'll go 20. And we'll make our background yellow as well. So therefore you could see the change here. The bands that we've placed here. So we'll say 80 is very high, 20 is very low. So what RSI essentially shows you is how oversold or overbought something is. So right now we're hitting at this 80 level, which is indicates very
we were more overbought several months ago than we were now. It's interesting.
Right in May and June, right? Yeah, that's because we essentially tripled or quadrupled our daily volume. Our market cap was tripled or quadrupled. That was some of the biggest bull movement. Like let's just show you how
Quite some big movement the last month.
Right. I mean, but
we've more than doubled our price. But
let's just look at that right there. 236% price increase. 236% price increase, and then
you want to show people how you just did that actually.
So if you go here, and you go to long position, short position, it would be traditionally a long position right here or a short position, indicator here. But if you just click right on top of it, it'll give you the date range and the price range. And I just clicked price range, which is this right here. And then we'll even show you another one right here, which is, that looks huge too, right? But actually, that movement that we had from March to May, or March to June, was way bigger than anything that we've ever seen. This is only 142% increase, and we'll draw even another one.
The last one.
Even from the China FUD to here. So if you would have bought the down of the lowest of the China FUD and the highest here, where we're at right now, which we're at an all-time high, you definitely still having insane gains. 135% is nothing you'll see in the stock market.
So let's talk about the RSI.
Right. So this is the RSI shows you. RSI shows you how oversold it is and how overbought it is. So when it's approaching 80 or even above 70, anything above 50 indicates it's above. Anything above 50 indicates it is overbought, and anything below 50 indicates it is oversold. But obviously 49 isn't a strong indicator. But 80 is a very strong indicator that we're a little bit overbought. But remember, RSI isn't like sell now because it's at 80, right? It just shows that how stretched thin the market really is, and
it's one indicator of
right.
several that you should probably use. You can look at this historically and see
right.
the lows on the RSI and the highs of the RSI indicate, times of reversal for the most part. You can see a lot of those peaks in the past year here that we've graphed have been peaks as well as on the RSI for the most part, and then the lows represent some of the lowest times and best times to buy. When China FUD happened, we were pretty oversold. We went down to about 25.
But exactly, and then we jump
RSI.
back up. So when you see parabolic movement like we're seeing right now, we're sitting at all-time highs. We generally don't like to invest in such
You can
huge
see the
parabolic
RSI
movement.
currently is very high. It's at 80, and it hasn't been this high, since some of those other peaks that we see and noticed. And traditionally, after them, you see a pullback or a retrace in the market. So I think a lot of people are expecting to see, and probably not until the fork. I think we'll continue to see run up, but you can see the RSI is pretty high over there. The MACD, and it doesn't look like it's about to cross yet. If you want to zoom back in on just the MACD alone,
I mean, it's
it's still
it's
kind of
still
going
very
upward,
positive, right?
and
Yeah.
there's really no clear indication that it's about to cross. You could certainly zoom it in a little bit for more detail, but we're on. Is this the daily? So yeah, we're on
This
the
is the
daily.
daily.
But you want to kind of compare some of these indicators together. So you have the RSI right now that says, hey, we're pretty overbought. You have the MACD, which indicates, we're still kind of on the way up. So
While we're on here, sorry, while we're on RSI, sorry about that. I had a little brain fart. We'll go to stoichiometric or stochastic. Sorry, stochastic RSI. So here's the stochastic RSI, and actually, I'll let you talk about that because I know you're a bigger fan of stochastic RSI than I am. So.
Stochastic RSI is just another, it's a different way to utilize RSI. It oftentimes matches what the RSI is pretty similarly if I pull them both up together.
Well, it shows it on a different level, right? So when the RSI is when the RSI does increase, or it does hit its major peak and valley. So this is like a small little peak and valley. So this is peak. This is the valley right here. I'm looking at the yellow chart, and if you look at the stochastic RSI, you'll see that it kind of bottoms out, and then the RSI shoots back up. So this kind of
direction.
Exactly. So this indicates that we're pretty high right now, even with the stochastic RSI. That a reversal is imminent. So that's you could see that there's a cross on the stochastic RSI, which kind of shows that the reversal is imminent. But the cross on the stochastic RSI really doesn't tell you that much information. But yeah, so. Yeah, that's the stochastic RSI. Still a very valuable indicator. I use it all the time. Yeah. So let's look at our previous indicators. Okay. So I've made my charts, and it's been such a long time since I've made it fresh, a fresh chart, especially with the indicators that I already use. So there's a lot of other things that you may want to test out, like. There's I think it's Ishimoku bands, Ishimoku clouds, which are crazy little things too, and shows you kind of where we could have diverged, or what the likelihood of a scenario is. The Ishimoku clouds here, you can see the little bands going around here. It kind of shows you how stretched or how far we could have been up or could have been down, based on the price action of the previous days. For this is 26.52. We're just going to delete that. I just wanted to show you that there's just hundreds of little indicators out there that you could use for your analysis, but we're just going to go through some of my favorites. And
give me one sec. Go back to close this for a sec. I want to answer a cautious question. So the RSI cuts twice and curves is somewhat confusing. Give me the mouse for a second. So I know exactly what you mean. So right here, this isn't, a very good indicator if all it's going to do is go back upwards. But one thing you could do is you could pair both of these RSIs together. So, for example, don't just necessarily go off this information here, use them in tandem. So, for example, if you take a look at this point in time, it's crossing here, and it's also very low on the normal RSI. So you could use the stochastic RSI to give you a good indicator that, hey, we kind of are at the bottom. And the RSI kind of confirms that too, that it's also very low. Whereas, say right here, yes, it's flipping direction, but the RSI isn't necessarily all that low. In fact, it actually is overbought at this exact moment in time. It's a RSI of about 62, which is pretty high actually. and may not be necessarily a good time to buy. So you can use the stochastic RSI in tandem with the RSI to just give you a general direction of where things are going, and then you can kind of cross-check it here on this normal RSI. So
Right.
you never really want to use just one indicator alone by itself. Of course, there's plenty of examples that you could probably cite out in the MACD here that don't necessarily give you great information. So, for example, even here, this little ride right here, you see how we kind of are in a downward movement, yet the price action goes up. So nothing is 100% or going to give you accurate information all the time. In fact, in cryptocurrency, oftentimes news overrides all of these technicals here.
Right.
But it's definitely a good foundation, and technicals definitely do exist. So we definitely recommend using as many of the indicators as in tandem with each other to help you decide at any one point in time.
Yep. So next thing that I'll really go through is one of my favorite things is so where is
You're welcome, Akash.
here is one of my favorite ones. So this is actually, and it is the most popular. Okay. So it's the squeeze momentum indicator. So it kind of shows you our pattern of momentum going forward, and and how cyclical in nature these markets really are. So we'll see. We'll have a series of pumps going after a series of dumps. So right now we're in a very bullish movement. So you can see the bright green means it's still lots of positive momentum going on here, and dark green means waning momentum. And so we thought we were headed downwards. And then we just had this explosive growth on the 29th.
How would you read that going forward? What might that information right now tell you about the chart?
So right now, so this shows you that this is still a bullish momentum going forward, right?
Based off that indicator,
right,
price
right,
would rise.
But don't just go off the daily. Switch up your intervals, and I'm saying that for all indicators. You want to look at your intervals for all indicators at a different interval. Right, so on the 4 hour, our MACD is already crossed, and we're headed down. That's what it's saying, including the RSI. The RSI, it was at 80 earlier on the daily, and on the 4-hour indicator, it shows that we are, headed downwards. Even the squeeze bear momentum is that we can't keep up that large green bullish momentum of our previous days, so we're kind of waning off that as well. And the 4 hours is a pretty good indicator. It kind of shows you even better price points or price action. The daily doesn't really show you too much, and obviously the hour will even give you an even more detailed view.
Dailies definitely use more if you're
long term.
If you're in real long term, it's not.
Right.
If you're looking to trade at an actual price point, you definitely want to zoom in further than the daily. If you're looking for a steal on the market, if you are just looking to trade and find when the best time to get back into Bitcoin is, the daily might do. If you're just planning to hold it for several months or a year, the daily would be a pretty good chart to use. But
right.
If you're zoomed in and you trade more than once a month, I'd say you definitely want to come in closer than the daily. And a lot of times you want to see, the best thing to do is wait for when these indicators are in agreement with each other on multiple intervals. For example, the daily, the 6 hour, the 4 hour, the 2 hour, etc. So if they are, that's the best thing to do. If it just says, to buy on the 6 hour, but everything else says to sell, then, it's probably not a good time to buy.
Right.
So you want to try and zoom into as many intervals as possible and see if you get things in agreement a lot. And of course, if you're looking to, trade at a more exact price point, coming closer than the daily.
Right. So, for example, we've hit a negative momentum, and MACD crossing on an hour, going down significantly. So, this one glance, you could see that, we're going down in the short term. But in the long term, 12-hour, you could see that, we still got some wiggle move until we've confirmed a a bearish movement, and we haven't confirmed a bearish movement. This is just the hourly kind of just shows you the price fluctuations into severe close, like under the microscope, essentially. So it is better to use along the bigger intervals because it gives you a more accurate depiction of if it is actually a bullish or bearish market. But to get to actual price point, you want to use smaller and smaller intervals. Yep. So we're gonna even add another indicator here. Let's actually shrink the rest of them here to a decent size before we add another indicator. Again, this is the lazy bear, so squeeze bear momentum. Let's insert another indicator here. And what I like to use
Can we keep the same indicator with different timelines, like 4 hour, 6 hour, daily? Yes. So that's what we mean. So you can keep those those indicators up on the screen, and quickly swap. Using the upper left, the hourly chart. The interval chart. You can switch it from the hourly. Right now, you can see it's on the hourly, but you can keep these indicators up and easily maneuver between those different time intervals. And they will look different on different time intervals because they're graphing and charting different data. So, you want to just swap that down using the drop down in the upper left. How
do I get out of this?
The intervals that we're on. We're on the hourly, so you want to change it from. Snake just pulled up
How do I get out of this?
something. Maybe just refresh the screen and see if it disappears.
Let's save this so we. Oh no, it's right here. Okay. Okay. All right. How do I get out of this? Maybe it's this. No.
Maybe refresh the page.
All right. Yeah, we'll just refresh the page. So we already know how we got all these. All right, nice. Okay. Oh no. How do I get this out of here? I used to know how to do it. This is annoying. Oh, there it is. Okay. I don't know what I just did, but follow the video. If you ever get stuck in that point, just click around like I did.
Yeah, there's always there's so many indicators inside of all the trading platforms that sometimes it helps to just play around with them and
right.
Become an expert at using them. They take a little bit of time to get used to, and you can certainly grow to like some of your own indicators. And there's a lot of them in there in that public library that people have created for people to use.
Excuse me. So that's interesting. There it is. Okay, so it's the wave trend with crosses, lazy bear. So that's a really nice one I like to use. Again, there's thousands of these, so just you could pick and choose which one really works for you. But this one, I really like this one because it's actually let's actually zoom in here. So you could also save these chart layouts, so you'll never have to touch it again.
We should show people how to save them
right.
as well.
So this is a really nice indicator. Let me kind of change the thickness here of these lines here. Oh no, I don't want to change that. Yeah, there you go. There you go, and we'll make that a nice little brighter green. So this kind of shows what your highs and lows are for the wave trend. So what wave trend really means is it's the oscillation of your price movement. So I know it sounds kind of weird, but it really does show a significant. Actually, we'll decrease that just because I'm trying to show you guys the crosses here. So this says circles. Okay. Anyways, so let's zoom in here. So these little circles here shows you where it passed over. So right here, it's the green. The green circles mean buy signal or a buy or a positive movement on the wave trend, and the red signal indicates downward movement. And you'll see that this is the red and the green cross. So if the green cross is on the bottom, it's upward movement. If the green crosses with a red on the bottom, no, I mean on the top, it's downward movement. So right now, it looks like we're about to hit anytime soon. Very very soon, and we'll go into the 4 hour and look at what the price action is there. So it looks like we're already headed downwards, on a downward wave trend or a downward trend rather. And it even says the red signal here, with the red circles here. So yeah, definitely on the short term, it's a downward movement. We see the MACD downward movement. We see the RSI slowly decreasing, which indicates downward movement. It's still at a 60. So, if it does get below that 50 or 40 mark, you may want to think about picking some more BTC up. Even with the high prices, it's not a bad bet. Momentum waning on the 4 hour, decreasing. So that's one way you could check at all these different little methods that we just went over. Is you take a big picture look at everything. You want to make sure when you're making these decisions or calls, you're going through everything here. So yeah, and then that's pretty much almost all the indicators I use. There's another one which is gives you volume oscillation. So it kind of shows you how much volume
Do
is
the
it.
OBV, or is that it?
What?
Volume oscillator is very similar.
Yeah.
OBV is a volume indicator. Something that you would want to look at, especially
On balance volume.
Yeah, not necessarily as much per se with Bitcoin, because Bitcoin traditionally has a lot of volume, but in especially some of your smaller altcoins, OBV is a good indicator to how much volume there is, which is a indicator essentially of how much liquidity is in the market. So if a lot of people are trading it, there will be volume, and you can see in Bitcoin historically, there's pretty much been a lot of volume, especially as of recently as we've grown. Do you want to go back to that? Where'd you go with it?
Sure.
So there's been a lot of volume there. This is the volume, OBV volume. There's been a lot of volume. In fact, it's been increasing, which is kind of expected. Bitcoin has been growing in price. More people are entering the market. In fact, I read just the other day, I think 100,000 Coinbase accounts are created daily, which is pretty crazy. But the OBV is something you definitely want to take a look at for coins that aren't so hot. So maybe, if you pull up your Neos or not necessarily not so hot, but some of your smaller altcoins, and if there's not a lot of volume in them, that means that there is not going to be a lot of immediate price action. There needs to be volume for there to be price action. If there's no volume, you're not going to get large swings in price. So just something to keep an eye on as well. Maybe you're looking to enter a new coin and you want to check out, is there any movement or any liquidity in that market, and it's a little bit smaller. Take a look at the volume and see if there is a big portion there. Has it died off recently? Is it low? Is it high? I'm sure if you looked at something, just pull up Neo or something that isn't as popular as Bitcoin, I'm sure you would see more variance in the OBV. The OBV here for the Bitcoin looks kind of, pretty steady. Now for something like Neo, you can see the volume shifts and changes a lot. We've dropped off a lot from, back in the day. There's more noise and pattern to the volume in some of these smaller altcoins. For Bitcoin, it's very consistent, but you can see here a very distinct pattern of volume. It's there at the bottom here, that blue one.
Right.
So you'll see, like I said, for altcoins, Neo is definitely obviously one of your popular altcoins. But if you go down even further on the list to something weird like, Verge or Civic or Steam, something that's not, talked about, daily, you'll see OBV looking,
Right.
A lot different than even Neo here. So it's definitely something to just keep an eye on when you're trading.
Right. So I think we'll just go over indicators for now, or do we want to go more into depth? well, we'll go over wedges and
I think we should follow this up, and if you guys
Right.
are interested in what we just spoke about, we can go over a lot more things. Like if we go back to Snae's original chart, you can see there's a lot of like tunnels and different patterns there on the chart itself,
Right.
not the indicators, but there's a lot of different candle formations and basically
Right.
formations in the chart that could help you allude to what may be happening
Right.
next. based
Support
on-
lines, resistant lines. You know, you want to see if you have a wedge. For example, like, this could have been a nice little wedge right here. Whoa.
And there's also some other indicators even that I
Right.
like to use. For example, one of my favorite is the Fibonacci retracement tool. So if you guys, we'll post this as a recorded call, and you guys can certainly go back and view this. And if you guys are interested, we could follow it up with something more. I know that it was a request for a lot of people that we displayed and showed you guys what kind of methods we use in the charts, and we could certainly take it a step further if you guys would like. Next call, I think, will be focused on how we're preparing for SegWit, which will be next weekend. Our next call will be geared more for European times. It'll be next Saturday night at midnight PST time. So that'll be on
the 12th.
Essentially the night of the 11th, morning of the 12th.
Right.
And that'll be 12 a.m. PST time, 3 a.m. Eastern. And as always, they'll be recorded if you're unable to make it, but that'll be geared more for European citizens who will be awake Sunday morning to join the call.
And I think for Coinigy, before we forget, Coinigy is essentially the same. You right click, insert indicators, and it's exactly the same as TradingView. So
very, very, very similar.
Right.
Like I said,
but it won't have these public options like we're using here on TradingView, but it will have the significant more exchanges, like almost
so you can see your exchange
20
in the
times
coin
more
on the
exchanges,
left.
right.
So you can pick the exchange on the far left, and if you select one, for example, Binance, and then you see all the coins in the second column that they carry, or all the pairings.
Yeah, and then we'll go to Bittrex, and Bittrex is probably a really big one that we use
library.
here.
Bittrex probably has the biggest library of pairings.
Right.
And you can use them. Like I said, you want to chart typically in a chart that has more liquidity and volume.
And you'll see more advanced techniques of when I go live. Later this week. And you want to make sure you're keeping an eye on that. Because right now what we do here is we're trading against the dollar, and that really helps my technical analysis. Rather, if I do Neo BTC right now, and I'm at Bittrex right now, it shows you this wild price decrease, right? But it doesn't really take account for the insane increase for Bitcoin, right? And this kind of takes account. The orange line takes account for the Bitcoin price, but then if we go to Neo USD, it'll show you a different story. So we'll go to the Bittrex USD. It'll show you a different story where we're actually in an upward movement. If we're pairing to the dollar, and we have this bottom support line, which indicates still bullish movement in the long term, because we are slowly trudging along this line, and which has a positive slope. So there's a lot more advanced techniques, and we'll show you wedges. We'll show you how to draw your parallel channels. How to draw your trend lines, how to draw an accurate trend line. Like for example, this is November 15th here, and I would kind of ignore this little dump right here. And we'll show you the moving average, what a moving average cross is. Eventually that'll be all coming out within the next few weeks here on the Moon Lounge. By popular demand, whether if you guys want a Q&A session or you guys want to go more into depth with the technicals here. So definitely.
All right.
Add anything?
No, I think that's it. So again, you'll be able to view this call as always in the Moon Lounge. It'll be recorded, and we'll post that. Excuse me, momentarily. Actually, you might be able to just use the existing link. I'm not sure. To get back to this video, maybe that's how it works. So we'll end the call, and of course, ask us any questions next weekend. I think we'll focus more on how we're preparing for the Segwit 2X split, which will be probably a few days after our phone call next weekend on the 12th or the 13th.
Is it the 12th or the 13th? I thought it was the 15th.
Whenever our phone call is, the 12th or the 13th. So the split will be, middle of that following week, and we'll just explain to you guys how to best prepare and what we're doing. And, of course, you can ask us any questions inside of the group. And just by the way, our next report should be out in a couple of days. It's on Komodo and Monet's. It's very detailed, brought to you by Henrique, who I think has done a fabulous job on it so far. Monet's is the first decentralized ICO launching on the Komodo platform, and it's been an area of concern, or an area of interest rather, for a lot of us in the group, I know. And you guys are always welcome to suggest things that we should research and report on next. And we're going to try to bring you one report a week. So look forward to that in a couple of days. Other than that, I think that's it. We didn't have time to show you everything I think we wanted to show you. Especially
I feel like if we showed you everything, it would take a full.
We're probably going to launch an entire course on this.
Right, and obviously you guys would get it for free, but.
So yeah, that'll wrap it up, guys. So thanks for watching.
Thanks, guys.